things been going?
Okay. I don't know.
Yeah.
It's just so crazy how slow it is across the board everywhere. Not just San Diego, but all over California, so many places.
Yeah,
It's
it seems to be a lot of hesitation. We saw a little bump, I think, last week with some interest. I got a few listing agents said that the traffic picked up at their listings, I think when those rates dipped down last week, but actually almost 2 weeks
so
ago.
I'm working with Leo on with that listing we have up in LA, and I've never had a listing that I didn't have offers in the first couple weeks. And
Yeah.
20 years almost. We've never had that. So doing all this research on and just paying attention to that market, that market in general is pretty slow. Like that zip code and that size house, I can go back 10 years and there's 15 to 25 homes that sell in that zip code around that size every month.
Yeah.
And we were updating her pretty regularly. I update her every Monday, actually. We're on hold right now because she's getting some work done, but I'll still update her on what's going on in the neighborhood, just so she's aware and it reminds her that I'm still working for her.
Yeah.
But I was like, look, we got to a point where because we needed to lower the price and I had no comps to show her. I was like, we were 21 days out and there hadn't been a single sale close in that like zip code in a 2 mile radius around the property. So much bigger than the appraiser would use, things like that. And I was completely shocked. There was just nothing. There was a bunch of pendings and those were still floating around. But for the whole month of July, I think there was finally only 3 houses sold. It was incredibly
Yeah.
slow.
Yeah. Very
So that,
slow.
so it's very interesting. And all the nonsense that's going on with real estate right now, I'll tell you the one thing that is the most disappointing for me is seeing how many real estate agents are making goofy memes and videos about all these changes, which is to me is just mind-boggling because now more than ever we need to look like professionals.
Yeah.
Especially to buyers. Like, why would you be making goofball videos, making fun of yourself and other realtors? And then we wonder why people have a hard time deciding to pay us 10, 15, $20,000. It's disappointing.
Yeah, we should be, like I've been talking about, just expressing our value to the transaction. What do we bring? Goofy videos?
And
Yeah,
that
I don't
stuff's
know.
fine. And most of those things, when you look at they don't even reference the consumer. It's like you're
Yeah,
making fun of it within your group of buddy realtors, which is okay. But do it with that group, not do it on your public page so everyone sees it. Pay attention.
yeah,
I just saw something going on where an agent's super upset about doesn't want to offend doesn't want to offend his friends. I think he's a lender, needs to sell his house. I don't know how I pick. I'm going to offend so many people. It's, man, well, I'd start with all the people doing dumb stuff on in front of you on social media. Check them off. Go
yeah,
go with the professional.
yep,
Right now, less is more, in my opinion. Like if
yeah.
you're not doing anything, you might have a better chance because you haven't played your cards yet. And
No. All right. Yeah, 9:03. Let's go ahead and get rolling. So, what do you have for us today?
all right, guys. So
HBA
looks like
loan.
what do we have? We have about 25 people here. Okay. You guys probably know I'm a mortgage lender for Tried and True. I only do a little bit of real estate here in San Diego in the 2 zip codes that are part of my neighborhood because I don't want to travel and do stuff like that. So I work a very small real estate area and that's okay. But as I've been following this whole thing forever, and I don't know, I feel like things are maybe going to play out, but I think it's going to be incredibly hard for buyers, especially on the lower end, but even move up buyers into the $1 million price point, which we're seeing all over California. And frankly, because first time home buyers struggle with money, people buying $1 million home, they've done a lot in their lives to have enough money to buy $1 million home. So they're savvy about money as well. A lot of times the difference is they might be selling a house and having some equity from the house they sold, giving them a little bit of liquid cash that would potentially ease the stress of having to pay a buyer's agent. And a lot of those higher end people, I think also, they respect service providers because they realize that by hiring you as a service provider to do a lot of the heavy lifting, finding their house, it's going to free up time for them. And someone that's can afford a $2-3 million house, $800,000 house, they probably like their free time. So as a buyer's agent, I believe that we have a lot of value. However, we have a challenge of convincing the public how we get paid, because even though it is brand new for us to have a conversation with our buyer and really put them on the hook for paying us, those buyers, they have 0.01% of knowledge about what we're going through. But they probably have hundreds of stories of friends and family over their lifetime that have mentioned they've never paid their buyer's agent, and that wasn't common. So we've got a hurdle to get over that. And there's a huge concern about potentially working with the buyer, finding out that there's a compensation offered from the seller, and then maybe it doesn't work out, or taking a buyer to see a property that you can't end up negotiating a property, and the concern that maybe they walk. Maybe the house is more important to them than the relationship and paying their buyer's agent, which in my feeling on that is that's probably going to happen, because we're all working with humans, and humans they care about themselves more than anyone else for the most part. So here's what I've been looking at is different options and stuff. Since I do a lot of mortgages, what I want you guys to think about and what I've shifted from talking about is the typical DPA program, down payment assistance. Think about reframing your language to calling it a homebuyer assistance program. And I have of all the programs that I have access to and I pay attention to, I've done a lot with the California Dream for All, the big 20% one. I'm a huge fan of that. And I love all these programs. They're not, the free money isn't free, and they're not the prime rate mortgage loans. What these homebuyer assistance programs are an opportunity for somebody to get into a house and to pay you or their closing costs or add to their down payment. So there's a lot of great ones. CalHFA, their typical 3%, 3.5%, depending if you go FHA or conventional with them. It's a great program. It has loan limit, or it has income limits. It has first-time buyer requirements, meaning you've never owned a house or you've not owned a house for the last 3 years. So most programs follow that guideline. Now, I've searched really hard for us and for Tried and True to create a program that can benefit you guys. And to my knowledge, there is no one on the mortgage side talking about this yet. And so think about if you have lower income, first-time home buyers, people buying at or below the county, your medium home price in the areas you work. That is our target with this product. However, I don't have an income limit. So your borrower can make 300 grand and still benefit from this. If for some reason he makes 300 grand and all his money is put into some sort of financial tool that he doesn't have access to that money, some type of CD or something, who knows, the stock market, he doesn't want to take it out, but they easily qualify because they have plenty of income. They might need 2 or 3 extra percent to cover their closing costs, cover their down payment, and cover paying you if the house that they want to buy doesn't have compensation. So this program is very unique in the way that it's a down payment assistance, which I'm renaming homebuyer assistance, because the 3.5% second can be used as the down payment, can be used towards closing costs, any cash to close. And that cash to close can include your 1, 2, 3% commission, whatever it might be. Now, if you're not a fan of these programs, that's okay, but you might want to rethink this, because if you find people that you believe are on the fence, or you want to get them to buy into you even more, show them how to get financing that helps cover this. And so the way this program works is just that it's essentially a very common down payment assistance style, but we can use the money to cover the buyer agent commission, which is the biggest challenge that buyers are going to face and you guys are going to face. So they can get 3.5% of the purchase price. They can go into jumbo pricing. So you can use this at $1 million. That's $35,000 of a second. And just to pause for a second, the reason that this works with paying your commission is because it's a first and a small second. A single first mortgage, conventional 20% down, 5% down, an FHA loan by itself, you cannot finance any of this. But because it's a second, that second money can be used however the buyer needs to, based on this lender and this specific program. So it works with condos, SFRs. You can have a non-occupant co-borrower helping qualify. You can still get up to 6% seller concessions, even if you're paying your buyer's agent 2 or 3% with that down payment. It follows all the traditional government FHA guidelines. So it's a simple process to underwrite and pre-approve. The FICO score is all the way down to 580, so a lot of people can qualify, and we can go past up to potentially 57% of DTI, which is their monthly income, and manual underwriting this process. So this particular loan they've really found a way to stretch almost every single little benefit a little bit further. And if you want more information and you want to get your buyers into a program where you're sure that they can pay you if they need to, they're sure that they can pay you if they need to, allowing you to show them every property that they might want to see, and explain to them, once you are at the point where you're making an offer and you're not asking for offering list price and asking for 2 or 3% back, because that's already covered over here, you're going to explain to them that their offer is going to be that much stronger in a competitive market situation. We can close in the typical 30 days. So this program it's a very functional and beneficial program for what's going on right now. So if you guys have more questions about this, just reach out to me. I'm happy to talk to you guys more individually. And any of the tried and true guys can use this loan with you guys. So reach out to your favorite TTHL guy and get your clients pre-approved. Good talk. Is everyone muted?
Oh.
You're muted.
So that's good. We have we're going to need a lot of solutions, especially in the beginning, while we're all trying to figure this out a little bit and get into a flow. And sure, home buyers are going to be coming in with a lot of questions and things like that. So we are going to need solutions. There's probably going to be more and more coming out. I don't think that this is the end all, as far as the 17th being, this is how it's going to be moving forward. I think we are going to see revisions to this as we kind of move on through the year.
Yeah.
I'm curious to see what other loan products come out. This one's already available, but it's a great use for this product that people aren't thinking about.
This one was developed maybe about 6 months ago, but I was talking with the AE about it. My main question was, how can I use that money? And because with the Dream for All, you were able to do some stuff with it, but we weren't even talking about paying commissions at that point. So that was a big one. Can it be? And while I say this is not a free option, it's not, like you said, it's not the perfect solution. It still costs a buyer some money to use this. but it solves a huge problem. And
Yeah.
it can get them to the finish line. It can get you a stronger relationship and you a deal closed.
Yep.
So that's where it becomes a huge tool for us.
Yeah. So it's just another one in the tool belt. All right, cool. Good info. Thanks for coming on and sharing that
Yeah.
with us. If you have any questions, reach out to Andrew. If you need his contact, let me know, or it is in the online office as well. Cool. I'm gonna get moving on to the next thing here. Let me share my screen. So a couple points I'm going to go through first, and then we'll get into the actual forms. Today we're going to go over the PSRA, the BRBC, the SPBB, and actually those ones right there is what we're going to go through today. So all buyer rep stuff, and we're going to talk about kind of flow. How's this going to work when you're making offers? And this is what we're going to go through today. All right, so obviously beginning August 17th, which is coming up in just a few days, MLS participants working with a buyer will be required to enter into a written agreement with the buyer prior to touring the home. I've had that question come up numerous times. When do I have to do this? When do I have to have the agreement in place? It's prior to touring the home, and that is either in person or virtually. So basically, once you start working with the buyer or prior to going to tour the home is when you need to have a compensation agreement in place. A reminder on what does it mean to tour a home. Touring a home means when the buyer and or MLS participant or other agent at the direction of the MLS participant working with the buyer enter into the house. This includes when the MLS participant or other agent at the direction of the MLS participant working with the buyer enters the home to provide a live virtual tour to a buyer not physically present. A home means a residential property consisting of not less than one nor more than 4 residential dwelling units. So what does that mean? Single family homes, 1 to 4 units. This is what it applies to. If you're doing apartments, if you're doing commercial, if you're doing anything else other than a 1 to 4, this does not apply. So this is, if you're going to go show a 5 unit or an 8 unit, this does not apply. So we're talking about residential 1 to 4. So mandatory, oops, a little too far, mandatory provisions pursuant to paragraph 58 of the NAR proposed settlement agreement. Written buyer agreements must specify, conspicuously disclose the amount or rate of compensation the MLS participant will receive from any source, or how much this amount will be determined. The amount of compensation must be objectively ascertainable and may not be open-ended, meaning you can't write on your compensation agreement, buyer broker compensation will be whatever the seller is offering to the buyer. We got to get out of that mindset. And this is an agreement between you and the buyer for your services, your fee for service. You might, like Jeff Lobb was talking about last week, you might want to get away from talking commission, using that word commission. Get back on to this. This is your fee. This is your fee for service. I'm representing you. Let's move on from commission talk. It doesn't sound quite as appealing to your clients when you're saying, this is my commission, pay it, essentially. We want to be talking about your fee for service. This is why they're paying it, because you're offering this service to them, and therefore you get compensated for it. Include a statement in the MLS that MLS participants may not receive compensation from any source that exceeds the amount or rate agreed to with the buyer. So I have these two highlighted because these are the main questions that have been coming up. So you can't have an open-ended compensation agreement with your client, and you cannot get paid more than the amount that you put in your compensation agreement. So that example would be you have a, call it a 2% agreement with your client saying, I'm going to charge you 2% of the sales price to represent you in this sale. And come to find out the seller was willing to pay 2.5% or 3 or 10, whatever, it doesn't matter. You cannot make that extra money. You can only make 2% because that's what the buyer agreed. That's what you and the buyer agreed was your compensation. Keep that in mind when you're making these agreements, that You can't get paid more than what's in there. So if you're putting $2,500 in there, because that's all they're gonna agree to, prepare to make $2,500. Disclose in conspicuous language that the broker commissions are not set by law. This is in the agreements. We don't need to worry about this too much. I just wanted to point out these two right here in the yellow highlight, because those are a lot of questions that have been coming up. So NAR policy will not dictate the type of relationship the professional has with the buyer, whether it's agency, non-agency, exclusive, non-exclusive, sub-agency, transactional, customer. So we're talking about a compensation agreement, not necessarily an agency. Term of the agreement could be 1 day, 1 month, 1 house, 1 zip code, doesn't really matter. Whatever you come to terms with your client is what it is. They're not going to step in and say that was too short or too long or not broad enough or anything like that. Services to be provided, ministerial acts, certain number of showings, negotiations, presentation of offers, type or amount of compensation charge, whether it's 0, flat fee, X%, X hourly rate. So they're not dictating any of that. They are leaving this as negotiable between you and your client.